Hi. Welcome to our channel where we talk about the latest crypto news. Along Bitcoin's path, it has been marked by several crucial events which have defined the course of its journey and contributed a substantial influence on the general sentiment that dominates within its market. Among these critical events, the halvings of the cryptocurrency are shown most prominently, representing the centerpiece milestones which result in substantial realignments of the supply-side dynamics of the cryptocurrency and generally the significant price changes. After the last event, the compensations for blocks for Bitcoin were decreased to 3.125 BTC, marking the phase where the picture of the cryptocurrency has reached a critical point. As such, the development should be considered cautiously in the context of developing exchange-traded funds. The video is dedicated to uncovering the underlying importance of Bitcoin's fourth halving, expanding on the increasingly prevalent effect of ETFs as a pioneering force in the cryptocurrency market, and presenting an overview of how these factors work together to define the future state of digital finance. As a matter of fact, Bitcoin, a flagship cryptocurrency, is most known for its halving events coded into the protocol of the system. Indeed, this factor is essential, notably because halving is hardwired into the protocol to occur every 4 years or by the time 210,000 blocks are mined. During a halving, the phenomenon causes block rewards that miners receive for validating transactions over the network to reduce proportionately and systematically. This reduction effectively halves itself, thereby having a direct impact on the number of new bitcoins that get released into the circulating Consequently, supply. The measure significantly assists in quelling inflationary pressures, and in that way, make Bitcoin even more deflationary. The fourth halving event has not been very recent in the cryptocurrency world. The event took place when various market dynamics and the world economy remained uncertain, making halving quite a significant event during Bitcoin's development. By reducing the supply issuance rate even further, the fourth halving event emphasizes scarcity and limited availability as some of the fundamental principles behind the cryptocurrency, which makes it a medium of exchange. The historically preceding halving episodes were closely related to significant price explosions, strong hyped-up speculation, and intensified investor excitement. However, the market's reaction to the fourth halving has been much more diversified and nuanced, leading to various narratives, opinions, talks, and exacting discussions in the community pool. Moreover, the fourth halving event itself is a pivotal moment not only in Bitcoin's own unique story but also a stress test for its maturity, adaptability, and solidification of relevance in the fast-modifying overall financial arena. Thus, considering the reverberations and long-lived effects of the aftermath of this groundbreaking event, the implications of the fourth halving are set to shape the future of Bitcoin and the broader crypto market. There exists a debate about the devolving effects of halving. There is no doubt that the most previous halving events in the existence of Bitcoin have been pivotal factors that trigger bullish cycles for the cryptocurrency. These cycles are characterized by demand and eventual price action that leaves investors and enthusiasts entranced. However, with the maturation and growth of the cryptosphere, people are starting to question their validity, thus, the halvings are likely to lose effect and influence. As such, definitions from both the allocation and polarization point continue to be a point of discussion. Among alternative views, one may suggest that the diminishing importance of halving can be easily explained by the flourishing of the market efficiency concept in the whole segment of cryptocurrency. From this perspective, it can be possible to ment that over time, market participants have become more clever and knowledgeable. Thus, for example, they have been able to foresee and predispose to halvings for a long time, losing the surprising effect that at one time determined the very nature of the halving phenomenon. Conversely, it is possible to think that halvings continue to be a significant step, only the nature of the influence has changed. But, rather than eroding the cryptocurrency's long-standing value proposition, this characteristic emphasizes Bitcoin as a reliable store of wealth. This is especially true in some parts of the world where undue inflation puts pressure on existing monetary systems. Ultimately, beyond the question of Bitcoin halving, The theme of this argument points to a bigger story about the constant adaptation and evolution of the cryptocurrency ecosystem. As market forces change and players tackle more complicated terrain, evaluating the impact of historical catalysts such as halving helps to develop general references for how the sector responds, grows, and then seeks directions heading through volatility and uncertainty. While the ongoing discussions and market buzz about Bitcoin's long-awaited halving event have once again created considerable volatility and attention within the cryptocurrency space, another powerful, transformative trend that is reshaping the frontier of digital assets is exchange-traded funds. Exchange-traded funds are an innovative form of investment instrument that has been around in traditional financial markets for a long time, and they enable investors to gain exposure to a wide range of assets in one easily traded product. Nowadays, these instruments are becoming increasingly popular in the crypto landscape, and they enable individuals and institutions to seamlessly get involved in the rapidly changing world of digital assets by providing them with diversification and ease. In the contemporary financial landscape, ETFs importantly contributed to the permeation of cryptocurrencies into the traditional financial system. The mandatory registration of ETFs and the implementation of transparent trading mechanisms helped expand the number of potential players, from retail markets to major institutions. It was ETFs that turned out to be a workable solution to the issue of building a digital economy against the backdrop of the previously existing problems that paralyzed the development and spread of digital assets. Their ease of use combined with clear transparency put pain into this or that asset on a par with licensed activities. This, in turn, conveniently and effectively allowed ordinary users of trading sites to interact with assets with confidence and with the understanding of the law. In addition, the emergence of ETFs in the cryptocurrency space also illustrates the trend towards a newer, more grown-up capital market integrated environment characterized by stringent regulation and the priority of consumer safety. The ETF has served as a link between traditional finances and the emerging digital currency society as the broader cryptocurrency sector matures and draws traditional finance institutions' intense scrutiny. It made investors and attendees transition to cryptographic assets from classic securities easier. The advent of ETFs as a major player in the crypto realm is a manifestation of how digital assets are becoming more widely accepted as a credible asset class and the necessity for secure and regulated investment opportunities that fuel the general acceptance and adoption of cryptocurrency. ETFs are allowing investors to gain access to new and thrilling worlds of cryptocurrency investing regardless of their demographic, and in the process, are reshaping investment possibilities and promoting a more equitable and capable financial future. A paradigm shift in the cryptocurrency landscape, and one of the most crucial aspects of that development was the historic approval of almost a dozen spot Bitcoin exchange-traded funds by the U.S. Securities and Exchange Commission. Numerous market experts have hailed this decision as a watershed moment in the process of mass adoption and incorporation of Bitcoin and other digital assets into ordinary investment operating framework. Additionally, the SEC's imprimatur appears to have revitalized institutional and retail investor sentiment by removing previous ambiguities concerning de facto regulatory conditions. Furthermore, the emergence of ETFs supported by Bitcoin has created a novel era of affordability and ease for investment experts looking to achieve leverage in the zippy cryptocurrency capital market. The first to design innovations in this context involved these financial titans and experts. The top ETFs of these financial giants, BlackRock and Fidelity, include these exchange-traded funds, skilled discoverers among the complex financial environments. Thus, investors have the ability to divert resources into Bitcoin through the intermediary of experienced, trustworthy financial institutions among these issuing institutions. The speed with which these Bitcoin ETFs are receiving billions of capital demonstrates the rising interest and faith in the power of digital assets as a recognized asset class. ETFs like BlackRock's IBIT and Fidelity's FBTC have attracted billions of dollars in just a few days since their debut. shifting investment patterns across seasoned and amateur investors alike as global markets adapt to the evolving financial climate. This trend signals to a larger behavioral transformation in investors' perceptions and an increased penetration of digital assets, reiterating the coin as a feasible investment alternative. The approval of spot Bitcoin ETFs by the SEC is a watershed moment and one of the most critical drivers of crypto market development. Spot Bitcoin ETFs have successfully accomplished what many stakeholders have aspired to be: a bridge between conventional finance and the digital asset world. As the importance of these developments is becoming apparent, it is clear that Bitcoin ETFs are more than a stabilizing force. They have paved the way for crypto mainstreaming and a completely new set of investment avenues open to people all over the world. With the approval of spot Bitcoin ETFs as a historical first by the SEC, a new narrative has emerged within the cryptocurrency market's dynamics. Not only is the event a major step towards its integration and acceptance within the mainstream, but it also paves the way for several institutional heavyweights to dip their toes into the waters. To put it plainly, the gates have been breached. For the first time, well-known Wall Street behemoths have openly given their seals of approval and begun to appreciate the potential of the cryptocurrencies. One good example of institutional endorsement is the banking giant BNY Mellon, which recently declared its meaningful investment in a spot BTC ETFs next to 4 companies. With this announcement, BNY Mellon not only affirms its faith in the lucrative future of digital assets, but also sets precedents for other traditional financial institutions to explore such opportunities. Most importantly, the publication of this exposure by BNY Mellon signals a very powerful approval of the recognition and long-term capabilities of Bitcoin and altcoins as sustainable financial products. In addition, this decision's ripple effects are resonating far and wide in the financial space, and industry giants such as Morgan Stanley have taken notice. According to some reports, Morgan Stanley is reportedly looking into ways to bring spot Bitcoin ETF funds to its large network of brokers and clients. This practical experience not only reaffirms Bitcoin's growing reputation as a right asset class, but also demonstrates the rising influence of digital properties in the wider financial playbook. In conclusion, the SEC's recent approval of spot Bitcoin ETFs has not just unlocked funds from institutional investors to pour into the cryptocurrency sector, it has also unleashed a new tide of institutional backing from major players in finance. The intersection of licensure, institutional backing, and commercial execution reshapes the perception of cryptocurrencies and helps inaugurate a new chapter of financial revolution and inclusion. While the attention of many revolves around the US markets, recent developments in a plethora of jurisdictions ignite a newfound wave of interest and possibilities beyond America's borders. A prime example is the launch of Bitcoin and Ethereum ETFs in Hong Kong, signaling the start of a new age of ETF expansion on a global scale. While these offerings might not be as large-scale as their American predecessors at first, they will spark what industry professionals refer to as a sizable ripple effect across Asia, which essentially means that other countries in the continent are likely to follow suit in the near future. Thus, this transition to global adoption and utilization of cryptocurrency signals an important milestone in an international constancy that has gained economic traction, namely distributed currencies maturation and established acceptance. Conclusion. With Bitcoin sorting through the dust kicked up by its 4th halving, a new frontier is rising with the advent of ETFs, a newly transformative force that is poised to redefine the future of cryptocurrencies. Despite the disputes over the diminishing returns on halvings, ETFs have paved the way for mainstream acceptance and the participation of institutional players in digital assets. The approval of spot Bitcoin ETFs in the US and current global expansion efforts have laid the groundwork for a sector primed for a growth spurt and maturity renaissance. However, while investors and industry players brace for the future, one thing is expected: Bitcoin's journey is not yet completed, and its best days may be staring onto us in the ever-changing domain of digital finance. That's it. Thank you for watching. If you want to read more crypto news, follow the links on the channel. Have a great day.